A very good morning, Mr. Gopal Krishna, other members from CAFRAL, and the participants to this very important conference, ladies and gentlemen. Let me start with thanking CAFRAL for inviting me and giving an opportunity to interact with you in a very important and contemporary topic for the banking industry today, that is the change management and the future of banking in changing marketplace. I had a look at the design of the program, and I see that it is very well structured. You would have a direct interaction and presentation from the past practitioners or even the current practitioners of change management in banking industry, and some of the relevant contemporary topics like inclusion, digital challenge, big data, analysis, all those have been included. So I am sure that the program would be very, very meaningful for you. I would be particularly looking to the group which is participating in this conference. I think you represent a very important segment in the banking industry, and I am telling this not as a formality but as a commercial banker. I know that the group which is represented here is very, very significant in more than one way. What are these? Number one, when a management vision is formed at the organization level or a leadership vision is formed, it doesn't come from the vacuum. And if it comes from the vacuum, or it only comes from the outside contribution or from the literature, it doesn't become effective. A leadership vision, a strategy, a management vision becomes meaningful when there is a healthy input from the operating ground level staff. So your role is to contribute to the management vision so that the vision which is formed is sustainable and meaningful for the organization. So that is one way. The second, once the vision is formulated, what is the next most important stage? And that is the execution, because without effective execution, no vision has any meaning. So that is where your role comes. And third is not only that there is a management or leadership or the board vision which you have to execute, you will be heading the team and you have to provide a vision, your own vision to that team for an effective execution. So in that sense, I think is a very important segment, and that is why I would really like to interact with you on some of the matters of immediate relevance, a little bit broad contour on what is happening and what is likely to happen. So before we talk about the process of change management, I think it is very important for us to understand that what is changing. Until unless we understand what is changing around us, so many things are changing. Things are changing in politics, economics, business, education, every area. But I would restrict myself at this point of time that what is changing around us, which has a direct impact or relevance for the banking industry. Till we understand what is changing, we cannot design any change management process. And without that, there is no question of execution. So from that perspective, I have chosen 10 themes which are happening all around us, which are changing, and which would have a direct impact on the banking as we do today or as we will be required to do tomorrow. Now, I have seen that whenever we talk about the change management in banking, the maximum emphasis is on IT, the digital revolution, the disruption, digital disruption. Of course, it is very, very significant. It is changing the whole way of banking in a very large, big manner. But having said that, there are many other themes which would have a direct impact on the banking. And since we operate in an economy which is developing, we operate in a country which is a fair mix of urban and rural population, we operate in a system where we have the what you call a privileged segment of customers, but a large number of customers who are having their first brush with the banking. We cannot ignore all those realities. If we are talking about the change management, it has to be an all-encompassing kind of strategy. So what are those 10 themes which I am talking about? And little bit briefly, what could be the implications? I'll try to cover everything in a nutshell because I am also running against some very tight timelines. So first thing is the demography, which is a well-known fact. But let's understand that as per a survey, by 2030, the median age of the country would be 31 years. And there will be above 65 years, the population will be only 8 to 9%. Now, this change in demography brings a different set of behavior and expectations from the customers, which banks will have to be conscious of. A little bit more on that I'll come. The second is of course digitization, which I just alluded to. As of today, there are around 300 million internet users in the country. It is expected that in next 3 years, the number will rise to 500 million. And there are already around 960 million mobile phone subscribers in the country. This is what the size of digital world which we are talking about. Now these two developments, they have led to a remarkable shift in the way the new age customers look to bank. Now they are increasingly looking at the way of conducting their banking through the digital channels, through the internet, through the mobile banking. Given the choice, this segment would not like to step into a bank branch. And let us understand, for next few years, for a decade or maybe 15 years, the banking industry, at least a large segment of banking industry, which is keeping its door open for all kind of customers. There may be players who are not keeping their door open for all kind of customers, but the large part of banking industry where the doors are open for all kind of customers, for next 10 to 15 years, you will be dealing with two sets of customers. One set of customers, as I just mentioned, who would never like to step into a branch given a choice. And another set of customers, the aging population, the pensioners who are in a large number, who would certainly like to come into the branch. Not only they would like to come to the branch, they would not expect to be disposed of quickly. They would like that some time is spent with them. And this is a harsh reality of life. Now, how to deal with, and the third segment which is getting added is the segment which have entered into banking system for the first time. They will have different kind of challenges, different kind of requirement. Now, how to bring a balance, and this balance is not only that what you do in the branch, this balance is to be thought about in a holistic manner. It means there has to be a good mix of physical presence, digital presence, direct physical presence, the physical presence through representatives, even the doorstep delivery. You will have to think in a holistic manner. That is the challenge for next 10 to 15 years. Maybe 15 to 20 years from now, the requirement would change significantly. So as I was mentioning, but this last segment, they would not like to come to the branch given the choice. They would like to operate on the digital channel. There is another very noticeable factor. This segment of customers is very impatient. They would like to have the ability to do all their transactions with the minimum processes, maybe single click if possible. And the another factor which was a very widely acknowledged factor in the banking was that so-called factor of loyalty. this loyalty factor, now it cannot be taken for granted. There is nothing like a, I mean to say, I won't make a very broad brush statement, but the customer loyalty as it was known in the past is no more true and is vanishing very fast. So we have to be conscious of all these facts. In fact, here I would really like to, there is a very interesting para in the famous book Bank 3 written by Brett King. It just gives a futuristic kind of glimpse that how the banking is performed today, or banking is expected to be performed. I'll just read this para and I think you get a sense the what we are talking about. That customers don't use channels or products in isolation of one another. Everyday customers would interact with banks in various ways. They might wire money to a third party, visit ATM to withdraw cash, go online to check salary credit, pay an utility bill, use their credit card to purchase some goods from a retailer, fill out a personal loan application online, ring up the call center to see what their credit card balance is, or report a lost card. More sophisticated they are, they may also trade some stocks, transfer some cash from their euro account to US dollar account, put up a lump sum in a mutual fund, and sign up a home insurance policy online. Now in this paragraph you will see the whole gamut of digital banking which we are talking about. Now essentially what this implies, this paragraph, and I think this is very, very crucial from the digital side of change management, that there is a need, there is a strong need of a single channel solution to multiple product offering. This is a subject in itself if I go into detail, but I think as a practicing banker, we all have seen at different point of time we keep on introducing new service, new delivery channel, you acquire a new vendor, that vendor had a different process, and over a period of time you have a handful of vendors, handful of processes, patches which are applied, but by doing this, if you carry the satisfaction they have offered a large number of products and services, but for the customer the experience is not seamless, then I think these are wasted efforts, these are wasted investment. So you have to seriously look at what you have accumulated in past few years and then how you offer a single channel solution to multiple product offering. So this was on the demography and digitization. A very important behavioral social change which has come, of course it is already well entrenched, but we should not lose sight of it. If you go few decades back, a general philosophy for a citizen was to save and spend. That philosophy has completely turned upside down. The philosophy today is to borrow and then keep on repaying over a period of time. It has its own implication for banking. So you have to design your products, you have to design your marketing, keeping in mind this change in trend. The third trend which I would like to mention is the rapid urbanization in the country. Now as of today, we have around 31% population which is living in urban areas, and it is expected that by 2030 this will increase to 42%. This is a trend which is already quite strong in past few years, and it is likely to only accelerate. And with the plans of the mega cities, smart cities, the pressure on agri-land, I think all this will contribute, country to contribute to the rapid urbanization. Now this means for the banking sector more opportunities in retail, the education support or the education loan, home loan, consumer loan, means all lifestyle needs which are required. It has also implication on your branch location strategy, more on the, if you talk about the ground level. If urbanization is happening, if there are particular centers in the country where there is a trend of migration from nearby rural areas to the city, and if banks don't make a careful survey and establish the physical presence in those upcoming areas, then if you wake up late, you would have lost a market share which you would have done otherwise. So again, change management is not something divine or something very miraculous which comes from the sky. It is our day-to-day banking. So when you are talking about change management in the bank, there should be a group which you should have mapped the entire country. You should have known which are the urban centers which are growing rapidly, which are the urban centers which are likely to grow rapidly because some new highway is coming, some countrywide project is coming up, and if they are growing up in the town, which are the areas which may grow, whether you should go and establish a physical presence there. At the same time, the presence which you are having in the old city, whether this presence is required, whether you still need to carry those branches. Actually, many of these branches are now, they have become a cost center rather than profit center. It's a day-to-day experience. Customers find it difficult to go to those branches. They are in congested urban area. There is no parking place. So a customer given the choice would not like to go there. Now, does it make a sense to carry so many such branches? So again, when you are talking about a change management, someone has to map the entire bank even from that angle. How many branches should be shut down? How many branches should be merged with each other? And which are the new area where you should open the branch? So urbanization has multiple implications from the viewpoint of customer segment, their lifestyle need, your own branch expansion plan, all those comes into this. Next, of course, the inclusion, which much has been spoken about. As we all know, with the RBI's financial inclusion plan, which was going on for last few years, plus PMZDY, we have added almost 300 million new customers. Now, this is again a subject in itself. I think I can speak 1 hour on this subject. But briefly, what I would try to say that yes, it has been a significant achievement, but it needs to be consolidated in a very meaningful way. If that is not done, it's going to be a cost for the bank and not benefit. Because my sense is, while the accounts have been opened because we had a certain deadline, but the supporting ecosystem, the BC network, the supporting branches for the BC network, the entire cash management, the BC training, the oversight over BCs, all these are the areas which are yet to be taken care of. As a result, you have opened a large number of accounts which are largely being catered by almost the same number of branches. It means it is resulting into only overloading on those branches. And in the process, they may be compromising on their core business which they were required to do. If we end up in this kind of situation, I think then it becomes more counterproductive rather than the meaningful for the bank. So the challenge now, having opened the account, how these accounts become operational, how we derive value from them, how we manage our BC network, how we do the multiple product offering, all those areas become very important. So that is the fourth inclusion. The fifth trend which I am talking about is the industrialization. See, as we know, as of today, the contribution of manufacturing to India's GDP is around 15%. Now, as per the vision of the present government and the plans which are in offering, it is expected that the share of GDP, share of manufacturing in GDP by 2025 should increase to 25%. And it means creation of 90 million new jobs. Now, when this happens, and this cannot happen unless there is a significant improvement in MSME segment. As a banker, you should understand, if we are thinking that only by setting up few large industries, the share of manufacturing in GDP would increase, is not so. Even if you look at today, what is the contribution of MSME to GDP, to export, to employment, you will understand. So you have to create a strategy which takes care of MSME segment in a profitable manner. It cannot be reduced to a lip service. It cannot be reduced to by opening few specialized branches or putting some structure on our website but not following it. It has to be a serious belief that MSME is something which is going to be very, very meaningful for the banks in future. There are a couple of other implications. With industrialization, even with the current trend, it would be but normal to expect, and trend is already visible, that many of the large corporates would move away from the banks. They would cater to their requirement largely from the marketplace, from the other players. So the banks need to do a serious analysis. If in today's bank model they are leaning unduly heavily on the corporates, so if they don't bring a change, if they don't prepare a change strategy, I think in tomorrow's time this segment would move away and you would not have captured the new segment. So those are some of the impact which the industrialization and the development of marketplace can bring. The next trend I would like to talk about is the education, and with the adult literacy changing, the focus on financial inclusion, financial literacy, the more the educated segment, of course, it will result into more saving, more demand for the banking products. So that is the plus side of the business. It generates more demand. But at the same time, this segment of customer would be more demanding. This segment of customer would be more knowledgeable. So you have to gear up to meet their expectations, because they will also have more choices. Already new players would be coming into the market, new methods of catering to the customers, they are coming in the market. So while they will create larger demand, but they will also have larger or the different expectation. While talking about the education, another interesting phenomena I note more as a banker. See, large number of banks in last few years, they have given substantial education loans. It means a large number of students have been extended education loan by the banks. But I find very little efforts to track these students once they complete their education and they become an earning citizen. In fact, by giving an education loan, you are sowing the seed for a lifetime relationship, which you should be able to capture and capitalize, but that is hardly done. So the relationship starts with an education loan, ends with an education loan, and the entire lifetime benefit of the customer which can be captured is just lost sight of it. With technology, that should also be possible. The seventh trend which we should be mindful of is the global integration. More and more countries becoming globally integrated. You can see, if you look at 20 years back and today, how much migration is there, how many people are getting the employment overseas, there are remittances are there forex requirement, they need the investment advisory services. So these are on individual level. Apart from that, corporates, both way, the foreign investment is coming in the country, and Indian entrepreneurs are also investing overseas, which creates its own demand for the banking services. Another trend which is now developing and which is going to be very strong, traditionally if you look at the forex business of the country, it used to be some definite segment of the advanced world, let's say US and Europe, where maximum your import and export relationship can be witnessed. Growingly, there would be more regional trade flows, more regional trade treaties. It's quite possible that some regional currencies may develop, which may become the currency of limited settlement within that region. And there are various countries and their groups which you already know. Again, for the bankers, this is a great opportunity, but banks have to change, keep track of this, change their own model so that they don't miss out on this opportunity. The next point, of course, the most relevant as far as the RBI is concerned, is all the changes which are induced by the regulators, and is going to be a very significant thing. So you all know we are talking about the Basel III, which is already now a work in progress. Within that, you are aware about the liquidity coverage ratio, net stable funding ratio, overall leverage ratio. Globally now, there is a talk about TLAC, that is the total loss absorbing capacity. As of today, it is only being applied to the systemically important banks globally. But these things ultimately they tend to catch up. So maybe going forward, a large segment of banking industry may be required to comply with same or at least nearly same kind of requirement. So the regulation which would shape the how the banking is conducted in a very big way. It means the amount of capital which you are required to keep, the amount of liquidity which you will be required to keep, they will be much more stringent. And with the same, you have to derive the maximum benefit, and in regulation would also be discussing the areas like customer protection, KYC. We know all around the globe how much developments have happened in these areas, and how many institutions, banking institutions have had to pay a substantial hefty price for weaknesses in these areas. So that is the next trend. That is the ninth trend which I would like to indicate here, is about the market composition. The whole composition of the market in which you operate is rapidly changing. It will change further. Now, I have already discussed about the new competition coming. So very soon, hopefully within this year, you will have a few new banks which are the payment banks. You may have few new banks which are small finance bank. The process which is already underway at this point of time to license them. You already have two universal banks which are becoming operative in next couple of months, the Bandhan and IDFC. So these are known facts. But beyond this, much more competition is seeping into the marketplace. Now, one trend which is quite visible globally, that with more and more regulation being applied on the banking sector, the shift, the business is in a large way, it is shifting to shadow banking sector. And I was reading a report only other day, even within India, the trend is not so much visible as of now, but there are some signs. I saw some statistics in that report that in last year or so, a significant business of loan against property, it has shifted to NBFC sector from the banking sector. So this is one of those indication of business shifting from banking to shadow banking. In context of India, it is more NBFC, but globally the asset managers, the pension funds, they form a much larger part of the shadow banking. Now, very interesting fact you should know, that an asset manager like BlackRock, which used to be a borrower from the banking system, now as of today they have become a substantial lender to the industry. It means they are entering into the areas which were the traditional preserve of bank. There are intended consequences, there are unintended. This is a very mixed group, I don't know. Some of these are technical matters, but I find that there are HR people, then there are risk management people, there are IT people. So what I say about this may not really, may not be understood by all, but it would do well for you to go back and try to understand more. See, because of LCR, the liquidity coverage ratio as it is prescribed in regulation, a situation has come today that for many large banks, it is more costly that if their customers keep large balance in current account. So it was in press couple of months back that a bank like JP Morgan has asked some of the corporates to close their current account or don't keep large balance in current account, either keep in some other asset class or move away those balances. Now, as a banker, particularly as an Indian banker, I think it will hit you very hard that how the thing which we would really like to most invite is for a customer to keep large balance in current account. And here is the bank which is asking that you take it away. These are all changes. And again, consequent to that, I read last month only that sensing that there is an opportunity, the asset managers, including BlackRock, they are offering products to take the overnight liquidity from the corporate sector. So now you can understand it is becoming a curious mix. I was telling other day in some other conference that maybe a few years from now, the e-commerce company would look more like banks, and bank would start more looking like an e-commerce company. You must be already reading about the Alibaba and the portal which they have introduced. Or here in India now we have the banks which are offering the one-click solution to your online purchase. So it is becoming a very curious development where these boundaries are crumbling. On top of that, there are two other trends which are again in a very nascent stage, but they are likely to, the way they have gathered pace in even last 1 year, it can again be a serious competition to bank. And that is, one is crowdfunding, which may again encroach the lending market which you are having, and P2P funding. Now, these are all changing the market composition. You have to factor all these developments into the change management strategy which we are talking about. The last trend which I would like to speak about at this point of time, but it is very, very important. This is more concerning on the employee side, and that is a complete change in job philosophy. See, most of you or many of you who represents that breed that okay, you join the bank and then you look it as a lifelong vocation, the loyalty with the organization. All those were the operating philosophy at that point of time. The operating philosophy at this point of time has completely changed. And there is, I don't say that was right or this is right, nothing right and wrong. These are the signs of changing times. So operating philosophy today is not to look at any job as a lifelong vocation. Or rather, it was a huge credit in old days if you remain with an employment for lifelong. Today it is a huge discredit if you remain with the same employer for more than 4 or 5 years. Even if you are happy with the employer and organization, there would be a lot of peer pressure that what is wrong with you that you are continuing with the same organization for such a long time. Now this is a ground reality, nothing right or wrong into it. But the fact is, if this is the ground reality, you have to plan your strategy accordingly. You have to plan that there would be a constant rotation, churning of the people, new people would keep on coming. You have to skill them in a short time. You have to take the maximum advantage during the time they are with you. So that is the next thing. Now, if these are the broad trend which are changing, then quickly which major areas which require change on the banking side? First and foremost is of course the HR area. As I have mentioned, the challenges, so the challenge of preparing a HR strategy in the organization, which is keeping with the current times, and then the retention of the people, talent spotting, skilling them, the frontline training, the e-learning, means a whole host of HR areas which you people understand. But my only observation is that sometimes these efforts are made in bits and pieces. So there is no holistic vision for the organization, and which can be operated at one time as a complete strategy, and which can remain operative for next few years. The second important area would be the risk management. And again, though I must say that there is a increased awareness about the risk management, but still it is looked more as a compliance function rather than a serious function. As simple as if I ask, most of the banks would be won't be able to tell me that have you set up a risk appetite for your organization. The very starting point of a risk management architecture, there has to be a well articulated risk appetite of the organization, which is deliberated by the board, which is adopted. Then you break it into the component. The aggregation of the component reflects the the whole aggregated risk of the bank or the organization. Such a simple thing is not done, and I think as a result we have seen today many of the banks, without naming anyone, they have come into grief because they have not set any risk appetite. Regardless of their size or capital, they have ended up taking exposures, disproportionate exposures in the sector, disproportionate size of exposure in the single entity. This all has happened because there was no general guiding philosophy of the risk and risk appetite. So I think we have to be mindful of it. These are again, each one of them are a very detailed subject, but I am just kind of leaving a point so that you people can reflect and go into more detail into this. And on that, a word of caution, and Mr. Gopal Krishnan also mentioned in the opening speech. Again, because things are changing, then everyone thinks that retail is a panacea. There is nothing like this. And even if everyone decides that okay, because corporate there are problem, or we have faced problem, we all go into the retail and this will solve all the problem, I think is a huge mistake. Let's not follow herd mentality. If you have to really become a serious and successful player in retail, it needs a lot of preparation, creating a lot of ecosystem, making organization ready for that. I can go through the entire process of some experiences which I gathered in my previous organization on the retail lending, but some other time. But the point is, just don't start doing a line of activity because everyone else is doing or because it is fashionable to do so. Every organization has to do a serious introspection, understand your own strength, your capability, your preparedness, then enter into the area. Third is IT. I again won't go into the detail, but I think all of you know, I did not reiterate that IT would have a very, very crucial role in whatever change management architecture you prepare. But the again, for some of the banks who are represented here, I am aware they have moved fairly advanced in this area. But my suspicion is that a large number they are still in too preliminary a stage when if you are talking about the big data and analytics, those kind of things. Again, if we end up doing it because it is fashionable to do so, because the consultant advised me, or because everyone else in the industry is doing, then again it is a cost, it is a wastage of resources. As simple as a thing, again from the practical experiences, I have seen in a number of banks that they have ended up entering into a contract, floating the RFP and engaging the consultant and buying the whole package for the, let's say, data warehousing. But without preparing their data, without cleaning their data. That all has not been done, but you because someone else is doing, you went into RFP, procured it. Now, with all such procurement, you always know there is only certain support time. There is only a certain time where you can ask for the add-ons or customization. Thereafter, everything starts costing you. Since organization is not prepared, your data is not ready, and you ended up doing this kind of procurement, by the time you really want to start work, you have already crossed that mandatory period, and you start paying up heavily for. So these are the small things, but we have to be very conscious of that in change management. The next 3-4 points is one is on innovation. So I think I have already spoken in various contexts. We have to constantly keep on innovating. The other very important area, again, some of the organizations are well entrenched into, but again my suspicion here also for a large number of banks who are represented here, that is the area of balance sheet management. There is no holistic sense of creating a group or making someone responsible for a complete balance sheet management. And a balance sheet management is bringing a balance between moving components. You have to keep on planning how your balance sheet is going to take shape in coming 1 year, 2 year, 3 year. It will have linkage with what kind of capital you have, what kind of liquidity you are required to maintain. If you are growing a particular asset class, what kind of margin you can expect there. If that margin is there, how it will feed into the profitability. So this whole balance sheet management and capital planning, I think is a high time this should be done in a very serious manner. Why I am emphasizing, all these are very important and enabling components if you have to make a change management meaningful. Otherwise, change management would remain half cooked. The other two areas, without going into much detail, where the preparedness should be done is on the corporate governance and customer orientation. I think you all understand, enough is said about it. But and on our part, you already know that Reserve Bank of India issued a Charter of Customer Right. All the banks have are expected to adopt the same, have their own board approved policy, and we have given a roadmap of 12 to 18 months for your own implementation. Thereafter, if need be, we may directly intervene into this area. And more recently, each bank has been asked to appoint a chief customer service officer internally, or what we call as the internal ombudsman. Now, I'll quickly just come to the topic which we are talking about, how to manage the change. We have seen what is changing. We have also seen that what is very important if that change is to be make meaningful and sustainable. In managing change, I think a fair volume of literature is available, and I am sure that every organization which has entered or which is entering into any kind of change management, whether you call it BPR or whatever you call it, they have the consultants engaged, and that consultants are guiding. I have only one advice as an experience as a commercial banker. All this is important. You know, you cannot write a new Bible of change management on your own when ready literature is available, where the wisdom of consultants is available. Certainly use that, but demand a very heavy customization from the consultant. Each organization is different, and any business would like to do, general tendency is to offer you off the shelf whatever is available. Now, don't cut the body to fit the clothes. So rather than accepting the off the shelf solution and products and then going through a lot of pain to adjust your organization to those off the shelf products, as a consumer you are paying for it, you have a right that all those things are customized to your requirement. So that's the only one advice I would like to give. Look for the serious customization before you accept it. As I said, given the time, probably I would have gone into some more details, but I would like to give you two references, because and maybe you people can then look into it. As I did mention in the beginning, the good policies are available, good literatures are available. You can get umpteen advice what to do. You can get the advice on what to do from a large number of sources, but the key is how to do. And this is one area where you will not get any advice. You will have to decide for yourself how to do. Now, in this how to do, I think there is a very interesting seminal work which is done, and this is a book which is co-authored by Sean Covey with Chris McKenzie and Jim Hewling, and the title is Achieving Your Wildly Important Goals, the 4 Disciplines of Execution. I think those who are interested can always refer to it. This just mentions 4 disciplines: the discipline of focus, discipline of leverage, discipline of engagement, and discipline of accountability. And the other important article on change management, which I found to be the most interesting and of practical value, and maybe CAFRAL may facilitate to, is an essay only. It is a essay by the management guru John P. Carter on change management, and the article is titled as Why Transformation Efforts Fail. And there he has listed 8 steps, how the change management should be handled in any organization. I think you will find it a very interesting reading. I think with that, I would like to conclude here. I would have loved to share some of my experience with the my previous stint as a commercial banker, but maybe it has to wait for some other time, because I am really running against a very definite timeline. But I'll in the end I'll just like to narrate a quote which is from Mark Sanborn, and it says, "Your success in life is not based on your ability to simply change." This is very carefully you have to. It is based on your ability to change faster than your competition, customers, and business. So change has to take place, change has to be sustainable, and change has to be fast enough. You just don't adopt change management because someone else has done. And if you look or intend to just copy that change management, then you have not done it fast enough. Then it will be a second hand product, it will not be effective in the same manner. So with that, once again, thank